Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back. Episode 204 of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, the main man of the hour, Mr. AJ Brown. Today, we're doing a very remote version of the show, are we not?
Yeah, I mean, I'm not as remote as you. I'm in home base of Trading Trainer, Fort Collins, Colorado. You are in
Poland, Eastern Europe.
holy moly. It's early in the morning. Well, not early, but 9 a.m. in the morning here for me. But what time is it there for you?
5 p.m. So
Oh
everyone's
my
starting to shut
goodness.
down. I'll tell you what, though, I was not ready for the cold, AJ. That was the biggest shock for me, being in California for 7 years. Literally, the first day I had to buy a jacket and a hat, and I was like, wow, I was just not ready for it. But
Did you pack only short pants or did you pack long pants?
I did. I packed a light jacket, and let's just say that, and no shorts, pants and sweaters and hoodies, but still not enough. I mean, it took some adjusting. Other than that, very beautiful, very tech innovative, seeing a lot of technology and the embracing of that. So, very pleased to see the American influence over here, and how popular things are. Everyone has an iPhone, everyone's wearing Nikes. So exciting stuff. With that
Uh,
being said, in regards to the markets, uh, the government shutdown, that seems to be the big word on the street. We did have some comments this week from some of our viewers about that. One of the questions was, AJ, we've been looking at this market continuing to make new highs. How is the shutdown going to affect things? Because I believe we were supposed to get some employment numbers today, but we didn't because everybody took the day. Well, because the government's not working. What's your take on all that?
Yeah, it's funny you should say that. A good friend of mine here in Fort Collins, the Fort Collins people don't know, has a very big component of the USDA, right? The folks that monitor cattle and stuff like that. So all the USDA folks are kind of furloughed right now. So I called her and I said, "Hey, I'm in town. Do you want to get lunch?" She's like, "Well, I'm not doing anything." So, yeah, but, as far as we're concerned as investors, it looks like so far investors have shrugged off the government shutdown. But yes, yesterday we did not get our weekly unemployment report, and today we did not get our monthly employment numbers. In other words, the Bureau of Labor Statistics is shut down. So we're flying blind as investors. That means the Federal Reserve is flying blind. The Federal Reserve had a bunch of folks, different Fed governors, speak earlier in the week, and they all mentioned inflation, sip, but they also said a more dire focus is going to be the employment numbers, which gave investors kind of a more comfortable feeling. If I bring up the Fed possibilities for rate hikes. This is October. No, this is December. This is October. October is almost 96% chance that there's going to be a rate drop of a quarter point. And then December, last week they were wondering because, the PCE came in kind of hot and employment came in kind of, stabilized. But this week it's the opposite story. Employment seems to be what people are worried about. The Fed governors mentioned that earlier the week. We didn't get our numbers because the government shut down. So right now, as of today, investors are pretty comfortable saying that there's going to be two more rate drops.
So no news is good news for the market.
No news or mentions of bad news. So, again, this is one of those ones where if employment starts to dip, that's not the best news for the overall economy. But for investors, it means that the Federal Reserve is going to drop the rates by a quarter point. And so investors get kind of excited about that. Whenever the interest rates go down, investors think risk on.
And so, being somebody that's not so in tuned with the policy makers or how things work, the tweets that I kept seeing was that the last time we had a government shutdown was in 2018, I believe, when President Trump was in office again. And so,
Mhm.
what seems to be the hoopla between, for why we're not able to figure something out? And because I'm seeing a lot of storylines, and I really don't know what to believe.
I mean, I'm not the most political person, but I live in Washington D.C., and so you hear things, especially at different cocktail parties and stuff like that. And it's kind of befuddles a lot of people, I think, because the Republicans run pretty much all of Congress. They have both the House of Representatives and the Senate. They pretty much have the Supreme Court in their back pocket, but we ought to talk about and it wasn't publicized, but we ought to talk about what happened on Wednesday with the Supreme Court kind of giving a nod to the Federal Reserve. But back to the original question, and of course the Republicans have the presidency, but they can't. And it's not even a budget, Sip. This is like just funding for the next 90 days, right, or something like that. It's like funding until December. It's not even. It's called a continuing resolution, and they can't seem to get this passed. And for some reason, Democrats all of a sudden have a backbone. They didn't have a backbone, if you remember, back in the beginning of spring, but now they have a backbone. So I guess the government is going to get shut down, or it has been shut down, and we'll wonder about for how long.
And it's this idea of every 3 months we have a continuation. Is that just how it's been for years and years and years?
No, it happens when, gosh, this is all speculation on AJ Brown's part. It happens when they can't get an agreement for a whole year of a budget. So then they just kind of kick the can and they do these continuing resolutions. And I almost wonder because again, you're hearing all these rumblings. I mean, in where I live, you're even hearing rumblings about how Marjorie Taylor Greene is kind of getting disappointed, and she always was like the face in Congress of the whole MAGA movement, and now she's getting disappointed with what's going on. So you're almost wondering if the reason why they're not passing a full year budget is because maybe some of these Congress people, whether they be representatives or whether they be senators, might be only wanting to commit to a few months at a time to these new fiscal policies rather than committing to a whole year because they want to be able to backpedal if they have to. I don't know. That's my take, and my take is pretty much worth the cost of this YouTube show, which is nothing. So you know,
Well, and so in theory, there's important departments within the government that just are not operating, and that's kind of the biggest, like, negative of it, right? The one that I kept seeing that I didn't even think of was the TSA. So I saw a couple tweets of the lines at LaGuardia because the TSA, isn't working, and I was like, oh wow, that's one that I think most of us would agree we need to get funded on a day-to-day basis, no matter what our political affiliation is. But there are a few others, right? Like maybe the SEC, would that be one? The CFT, any of the agencies, they all are funded by the government.
yeah. And like I said, the investors, you could see in the markets all this week, they kind of have been shrugging it off. But if this thing extends, more than a couple weeks, I think we're going to start seeing it in the markets. I'll tell you, on Sunday is when I fly back to my home in DC. We'll find out the whole TSA thing. We came on Wednesday, and I think that they're expected to still show up for work, but not collect a paycheck. So you can just imagine how motivated people are if they're asked to show up for work, but not get a paycheck that week. I think you're going to start hearing people calling in sick.
And I believe at least the biggest takeaway that I keep hearing is that the Democrats are trying to add in this healthcare for illegal
Yeah.
immigrants. That seems.
Uh, I think what the Democrat that's the news headlines, right? Because I think that there's a whole spin doctoring or machine, but the Democrats don't want to lose the subsidies, that we get we've had, when we go on to the marketplace, and a lot of folks go on the marketplace to get their health insurance every year. um, it comes with a lot of tax rebates, right? So people, I know, my family, I think, I'm not sure what the exact number is, but we pay a certain amount because we get some tax rebates. And I think that our amount will triple every month if we don't get those tax rebates. So what the Democrats are really, standing hard about is, um, trying to keep those tax subsidies intact for the next fiscal year, and lessen the cuts on Medicaid. But the Democrats, you look at the poor approval ratings of the Republicans so far, and what you can count on right this minute is that the approval ratings for Democrats are even lower, right? And so the Democrats really need to solidify on some messaging, and they're not. I sometimes listen to these people talk on TV, and the guy who's representing the Democrats in the Senate, Mr. Chuck Schumer, he's tired. He needs to go home. He can't keep his word straight. He doesn't have a message. You got to get some young blood in there that's like coherent. That again, that's my opinion. Uh, but yeah, I don't think it's about illegal immigrants getting on Medicaid. I think it's more about just keeping Medicaid and keeping the tax subsidies of healthcare and Obamacare valid for the next year when it comes to just regular Americans.
And part of the propaganda machine that's taking one side or another is largely been driven by the president himself. I don't know if let me go ahead and pull up this
Marketer in charge. That's
this
that's what I
this
say about him. He's a very good marketer.
this Chuck Schumer video. But did you see the one? I guess someone over at the White House taught Donald Trump how to use AI because
AI.
he's really killing it with these videos now. But this one is the one that he released earlier this week, where he basically infiltrated Chuck Schumer's voice and then put like this sombrero and mustache on. I think Hakeem Jeffries. I think that's his name.
Mhm.
And it was all AI. Like he used his voice. It was a fake script, and I was just kind of surprised that this is now a thing that we're just gonna make up our own commercials and messages of our opponents and post it. And then another one this morning that is making the rounds is this one, and this is what caught my head on. Trump just posted an incredibly weird AI video of him and JD Vance in a band, right? And then I don't know who this Russ Vaught is, but as the Grim Reaper. But like this is going to be a daily thing with the content coming out from the White House, and the market's going to react, and we're gonna see where things go. Um, so how does this become resolved? Like, what could we expect? What's a best case? What's a worst case scenario?
I mean, I think at some point right now, whenever there's a shutdown, I think that it becomes the blame game, right? And it's whoever does a better job of shaming and blaming the other side until they compromise. Um, I think when you actually get past all the AI videos and things like that, I think when you look at Trump's history and some of his things like that, he's not as um, hawkish as some of his Republican counterparts in Congress when it comes to health care. I feel like Trump actually feels like folks should be getting good health care here in this America. So I wouldn't be surprised if we see a little bit of caving on the Republican side, but not all of the um, wishes of the Democrats are met. But I bet you there will be some compromise coming up. Um, at the same time, again, my opinion, but if there's any Democrats listening, you really need to, solidify number one on a message and not have everybody just like going everywhere with all these different messages. Take Why don't you take a lesson from the Republicans and really solidify on a single message and get that through? And then the other thing you might want to do is, yes, I understand the amount of pain, but why don't, since you don't have any control right now, the Republicans control everything. Why don't you allow the Republican policies that are, why don't you let them go? And then let the American people, after they feel, what the policies are, make the decision at the ballot box rather than trying to buffer these policies or fight against these policies. Let them go through so that, and then, your message could be, hey, they had control of everything and this is what is happening. Do you like it? Vote yes for Republican. If you don't like it, vote yes for Democrat. It's very simple in my mind, but I feel like the Democrats can't get their butt separated from their face. They don't know the difference.
I wish it was that simple. And so, do they? Does is it Chuck Schumer and the president basically meeting in a back room, trying to filter through the details, and then they re-vote, and then once the votes come in, the government is back in business, and
For 60 days or 90 days or however many weeks the continuing resolution is. Sure. Yeah, I think from what I understand, it's this continuing resolution passed the House of Representatives. In fact, the guy in charge of the House of Representatives, Mike Johnson, actually put the House on recess so that it can't bounce back. It's got to, so it's in the Senate right now, and they need to get 60 senators on board in order to pass it. And they haven't got the votes because they need a few Democrats. And I think Rand Paul of the Republicans has been voting against it too. So they need somebody to cover up for Rand Paul as well. So, whatever. It's a big soap opera in my mind, but I'm more interested in the markets, and the markets are telling a whole different story right now.
yeah, and I just pulled up the S&P, and it's hard for me to accept the headlines that I keep seeing. Oh, the market's shrugging off the shutdown, shrugging off the shutdown, shrugging off the shutdown. It really does not care about the fact that a lot of these workers are not working, or we can't come to an agreement, because as of this morning, as of a couple hours, as of probably right now, we are sitting at the all-time highs.
Yep.
So is that the trend, or what is driving that this week?
Well, I mean, a lot of technology stocks, Nvidia, one of them, have gotten off and have really started to lead the market again. So people are seeing these gains. I think that the key word as far as the government shutdown yet is the word yet. Investors are not worried about it yet. But, you know, I think that the combination of the Federal Reserve, you know, most likely dropping interest rates in the middle of October, end of October. Um, I think that tech stocks and the AI movement moving ahead, I think this is what's powering the market, Sip. I also think there's a lot of retail money flooding the markets. And I don't, I'm not, you're not seeing a lot of the big money incrementally raising the markets. And I want to, if I zoom out a little bit here on the S&P 500, you'll notice that the S&P 500 just can't seem to get off this ascending level of support. It gets a little bit, but it may get as close as halfway, which is this dotted line on my chart here. And then it bounces right back to support. And every day we're starting to see the trend lose its aggressiveness. It's starting to go more flat and flat. And I've been looking at the order flow, and it's like a lot of small money investors are kind of piling on the news of the interest rates going down, piling on the news of AI and tech getting a buoy this week, but you're not really seeing the big money jump on board. In fact, let me pull up my rainbow plot. This is another example of, you see where we had this 3-day pullback, And we were talking about this last Friday, by the way. We were talking about the pullback and how far would it go? Would it go to this magenta zone? Would it go down to this red zone, or would it go to the green zone? Well, it turns out it didn't even make it to the magenta zone, which again tells me that the big money investors are basically, and I'm talking about hedge fund, mutual funds, pension funds, all the big money out there controlled by, just a few market movers. Um, they're kind of sitting on their hands. And the gains that we're seeing are more little money investors piling on some of these headlines. The fear, and actually the guy, the CEO of Goldman Sachs mentioned this as well. The fear is that the big money all of a sudden gets spooked and decides to, instead of sitting on their hands, start selling. And that would change. That would actually cause the market to really pull back. And the CEO of Goldman Sachs issued some warnings yesterday about that. So that's, I think when we look at the VIX, we see that as the VIX is, definitely rising, right? The VIX is now at 16. We were thinking that the new normal is 14, but now the new normal seems to be 16. Still a little bit below where our best fit trend line is here at about $18.95. But the VIX is creeping up, meaning that I think those big money investors, the market movers, I think those market movers are really hedging their positions, because any little tinder put into that pile of oily rags will cause them to start selling in a fire sale.
And I guess the employment numbers today would have been helpful in clearing up some of the mess today and or yesterday. And so, do we get that updated next week? Because that seems to be the big storyline now, that we're seeing what is going to happen with employment, because that will dictate a lot of the next interest rate cuts.
Yeah, I don't know. The bureau. It depends on when those workers get back to work, and they've been off work since Wednesday. So how much work did they get done trying to figure out the September employment numbers? That you can't just bring them back to work and they have the new numbers that day. They'd have to like spend a couple of additional days, getting their numbers in order and releasing them. So it depends on when the government gets back into force there before we start getting statistics again. Right now, we're flying blind.
Yeah, making new highs. No news is good news.
Well, we did get, so one thing I want to point out is on Tuesday, I follow these consumer confidence numbers, and the consumer confidence numbers, I'm used to these numbers being, between 100 and 110. That's where they've always lived during the 25, almost 30 years that I've been investing. And lately they've been down in the 90s. Well, they were expecting the numbers to be up at 96. Uh, the prior numbers were closer to 98 after being revised, and they actually came in at 94.2. This is not good, because now if you've even got a weak labor force, but now consumers don't want to go out and keep the dollar moving, buy things, that's not a good sign. There was a little bit of aligning with the JOLTS numbers. So the job opening labor turnover survey came in a little bit warmer than expected, meaning there were more job openings, but still this number overall, I'm used to being in like the 10 to 15 million range. So, people were celebrating that it came in a couple 100,000 more than what was consensus. But again, I keep telling folks that are interested in our methodologies, don't be quitting your job right now. Because if you quit your job right now, there may not be another job for you to land on. In fact, most of the JOLTS details, when you dive into this report, say that there's not many open jobs for you right now. So don't abandon ship right now. I would play the course, do your 8 hours a day, come home, do some investing, learn about end of day trader stuff, but don't just throw caution to the wind and abandon the reports.
And then, so is there anything next week that we're keeping our eye on, or is really the next Fed decision kind of the big news that's going to be kind of moving the market?
I mean, assuming that we get some sort of, Jerome Powell's going to speak next Thursday. Assuming that we get some sort of resolution to the government shutdown, we may get some of these numbers that we didn't get this week to come in next week. But otherwise, next week is usually our quiet week. We get the meeting minutes from the last Fed meeting, so we get to hear, we get to read about what they actually said behind closed doors, and that brings up, what happened on Wednesday. I don't know if you, on your travels heard, because it was actually downplayed. We've got this propaganda machine that I think people think that it's getting calmed down. I think it's actually getting aggravated in the other direction. The pendulum is swinging the other way. And the propaganda machine not only, raises to attention topics that, whatever party wants to have raised to attention, it also squashes news headlines, I think, that the party doesn't want to have um, publicized. And on Wednesday, the Supreme Court decided that they would, number one, hear the arguments about this, whether Trump can fire a Fed governor or not. And that's going to be happening in January. But this is where the Supreme Court took a pivot. A lot of these cases have been coming in front of the Supreme Court, and the Supreme Court has been agreeing to hear the arguments. But in between agreeing to hear the arguments, which is usually, scheduled months in advance, they usually say, but in the meantime, it's going to stand that Trump fired this person and this person has to be without work until we hear the arguments and make our final decision. But not on Wednesday. This is where I think the Supreme Court is siding with the Federal Reserve's independence. They said, we're going to hear the arguments in January, but in the meantime, Letitia James keeps her job, not only as a Fed governor, but as a member of the FOMC chair. And because they're not hearing the arguments in till January, she's going to be part of the next two Fed meetings. So that's like a big deal, because the Supreme Court has been siding on the side of let them be fired until we make a final decision. And in this one particular case, and they've made hints that they believe that the FOMC and the Federal Reserve should be independent of the executive branch. This was like putting an extra bit of confidence on that by saying, hey, she keeps her job instead of getting fired, and we'll hear these things in January. So she stays in her job. So that was a big news headline that kind of got quashed down, but the Supreme Court is most likely going to side with the Federal Reserve being independent, and that the president can't put any sort of additional powers on the Federal Reserve.
I did catch that, and surprisingly, I've been very in tune with the U.S. markets and news because I'm connected to everything. Two things that I had good takeaways from just the information was, one, she hasn't been charged with anything yet. So to fire somebody without any charges and or a verdict being made, I think that's a debatable approach. And then two, throughout the learnings, Scott Bessent, I believe, also claimed multiple homes as his primary residence. And so it's like, oh, okay. So like this seems to be happening among politicians more often than not. And so is that really the sticking point that you want to go with to get somebody fired, and or is that enough? Because you're really pushing it if people in your own party and team are doing the same thing.
Yeah.
there was some other news that came out this week with the pharmaceutical stuff. Did you see that have any effect on any? Because I don't think we discuss pharmaceutical names very often on here, but every once in a while we do, and that was kind of big news that Pfizer and the White House and the U.S. government kind of came together with a deal of some sort.
Hmm. Yeah, it's a business deal, isn't it? Um, not I saw that there was a big pop. I've been watching Novartis recently as a stock symbol, and so when it popped, I looked for the news headlines, and I came across these deals that maybe the pharmaceuticals just need to strike a business deal.
Kind of like Intel, right? That was kind of like the play, and I think the consumer at the end will benefit from that. All right, I do have a morning sip of the day, but we can keep it really short because I saw a video before we started the show, and thought to myself, this would be kind of cool to discuss. As you can see, I'm rocking my version 1 Meta Ray Bans. AJ, have you been utilizing yours at all?
Yeah, yeah, I've got the sunglasses, so I
So
used them yesterday, especially, Colorado gets 300 and what, 360 out of 365 days of sunshine. So walking around yesterday, I was able to take some good video footage of Fort Collins through my sunglasses.
yeah, and I kind of feel like a nerd on my adventure because I just have these on everywhere, and I'm just like click, 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 beep, 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 beep. But last week, Meta and Zuckerberg released kind of the innovation to the glasses, and I have a video here from Twitter, and the big takeaway is that not only you'll start to be able to engage with content within the actual lenses, and this
Mhm.
was kind of the first variation of that. Let me see if I could blow this up for us.
I got an
Uh,
advertisement, an email advertisement. I think they're going to cost about, oh yeah. Yeah,
yeah.
yeah.
So like if you're using like maps, right, you can kind of now like see it in your lens. And I'm just kind of fascinated with the evolution of these wearables and this wearable technology because I think this one is very useful in that I put it in my direction. I'm trying to go somewhere. I'm constantly checking my phone, although I have the robot like telling me take a right, take a left here. This is starting to be next level, whether it's going to be stock charts or the news or a Twitter feed. It's really starting to come together. So I thought this video was interesting. And, I just got my glasses not too long ago. So I don't know how quickly I'm going to be making the upgrade. But I thought that was very cool. And I think the investors are liking many of the things that Meta's doing. And this is kind of their push for wearables. So, I don't know if you'll be upgrading, but maybe next year at some point, at my rate, I'll probably end up breaking these somehow. Uh, but we'll go there.
Do
So
you think, because these augmented reality and all that stuff with those big goggles, they didn't really take off. All the companies made them, Apple made them, Meta made them, and then nobody wanted to wear these big giant, Oculus things unless they were gamers, right? But do you think the partnership with Ray-Ban to make these things stylish and somewhat like not in your face visible, but instead you look really cool wearing some Ray-Bans, and yet they have all this technology in them. Do you think that was the thing that actually put it over and got the early adopters to be interested in it?
I would say 50% because it's not only Ray-Ban, they have a deal with Oakley too. I don't know how familiar you are with the sport version of those popular glasses, but Patrick Mahomes, Super Bowl winning quarterback of the Kansas City Chiefs, it was in like a big promotion with his Oakley versions with the Metas. So
Right on.
it's more of like the glasses are starting to become normalized in everyday activity, and you never know when you're looking at somebody that has something on, they could be recording you and you just got to pay attention. But that was a cool little feature that I was excited to share, to talk about. We'll continue to enhance our morning sip
I
content
love
and
it.
and try and bring you some more news. But with that being said, folks, we are streaming live as always. Let's go ahead and bring up our links page real quick. We're going to take a little bit of a break here in a second, but before we do so, we want to give everybody a chance to check out AJ's quick links page. If you're new to the show, if you're not new to the show, thank you for coming back. We truly do appreciate it. If you are new to the show, this is where you can find all of AJ's goodies. We've got links to his social media. You'll see in some of his examples, we've got a blue arrow and a red magenta-ish arrow that kind of helps confirm some of these strategies that we'll be discussing. We've got access to our free daily workshop. And so if premium selling as a concept is something that's new to you, it's something that you want to learn a little bit more about, we've got an awesome free workshop for you to learn AJ's, core 4 introductory strategies to kind of get the ball rolling for you. We've got custom coaching, and we've got our total trading trainer program information all available on this quick links page. So I'm going to go ahead and throw that into the chat here shortly. Otherwise, we're going to take a break. We'll be back in a moment. If you have any names, if you have any questions, feel free to throw it in the chat. AJ, if we have some time, we'll run through it. Otherwise, we've got AJ's pick of the week. We've got our speed round, and we'll do a final check on the markets as we head into a weekend with government shutdown. So sit tight, folks. We'll be back in a jiffy.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
I just realized in that video you're wearing Ray-Bans, so you must have been a Ray-Bans fan before the integration.
I do like those Wayfarers.
I've always liked them because they feel as if they're not easy to break. And I think that's important for sunglasses. All right, checking in on the markets. We still sitting at these all-time highs. It looks like we pulled back just a tad, but still sitting high. Looking at a name that you're keeping an eye on. Is this something that came from your weekly mastermind call or your pick of the week? This is fresh off the hot lists for you, for us, for the people out there. We're looking at ticker symbol ENPH, which is Enphase Energy. Was this the pharmaceutical that you brought up? No?
No. This is Enphase is in the solar world. They're one of the big players in solar power and solar batteries. And I think that these companies behind the scenes have figured out their next play. So we know that a lot of the energy credits to retail folks are going away. But it turns out that the energy credits, and this is again a headline that isn't being published big time, and it is a nod to how business friendly the new policies are going to be. Enphase and the solar companies are still going to get a lot of boost from the federal government to sell business to business, right? To sell to commercial companies. So, it almost makes a little bit more sense if you think about it. When you start putting a lot of solar, and I think we found this out in Hawaii, we found this out in California, when you start giving a lot of retail customers, people like you and me, the ability to put solar on our house without, asking us to put batteries or all this good stuff to balance it out, we created a big problem because now during sunny hours, we have too much power. And during the dark time hours, we don't have enough power. And what you can't just, start a power plant at a moment's notice, right? So, it's created some destabilization rather than creating good things, right? But if you do it on a commercial level, right, and you specify, and now you're only dealing with a couple of customers, like you're dealing with a grocery chain who should put solar panels on all their grocery stores, and they should do it with batteries, and you can like specify and you can make more profits because B2B is always more profitable than B2C. So, all of these solar companies, they've been talking on their quarterly calls, on their earnings calls, about how they are going to pivot and start focusing on commercial customers. And I think that Enphase is positioned well. And their chart is showing that, we just got a signal yesterday. I'm not seeing the follow through that I need to see today to open a position, but it looks like we're getting a signal that a bottom is being found on Enphase. And I think for at least the next 3, 4, 5 months, this is not going to be a bad stock. Or if you want to, leverage into a substitute option, this isn't going to be a bad, position to have to be long Enphase. So I'm actually, saying when we get this bottom signal with follow through, and again, it doesn't look like today I'm getting the follow through, but I might by the end of the day. Otherwise, I'll be looking into next week to get follow through. I'm thinking of buying some Enphase stock, either in lots of 100 shares, so I could then do some option trading strategies in the future, like selling premium, buying protective, doing our whole process. Or there is a option I was looking at. I was looking at the Enphase June of next year $20 calls. I think that's what I wrote down here. Yeah, Enphase June $20 calls. That would be a great substitute to have instead of buying the stock itself. So, you can buy some contracts of those for just a fraction of the cost, and then let this thing go up as much as it wants to go up. And then depending when it actually tops out, you could either sell that for a profit or probably do what I will do, which is sell some covered calls and buy some protective puts. In other words, install a collar and give that the sideways motion, ability to then start collecting incomes off of your option trading, letting that time decay work for you. So Enphase is really on my radar this week for buying a long position on.
Yeah, and rarely in the pick of the week do you also have some complementary fundamentals. And it sounds like you like the fundamental changes that are happening in the industry itself.
Yeah, I think that solar is figuring out where it can actually participate instead of disrupt against the power grid in the US, right? How it could actually contribute and contribute well. Right now, solar dollar for dollar is the cheapest kilowatt hours. It's just that it comes along with these problems of not being continuous.
Yeah, and this I think is a great example for newbie premium sellers in that you're owning the stock in theory or having some sort of a substitute, but for basics, you own the stock. If it goes up over time, you kind of earn that value, but along the way, you kind of sell some insurance contracts and collect those pieces, and that's the beauty of premium selling, one of the premium selling strategies. So that's the one that I like to explain to all the newbies out there. So hopefully that's helpful, and hopefully any of our new viewers will put ENPH onto their watch list. Probably in that mid price point range, right? 40, not the cheapest, but not the most expensive. And we'll definitely continue to keep an eye on that. And
Let me see. I'm just curious. I'm going to pull up our options lookup tool. This is a tool that we created that gives people historical access to all the options data. And I just want to look really quick at Enphase to see roughly how much that substitute option is going for right now. So if I pull up the whole option chain and I go over to June of next year and I look at that $20 call, It's going for about $19.78. So instead of spending $37 on the stock, you're spending just a little bit more than half on that substitute option. When I say substitute option, what I mean is an option that when the stock goes up a dollar, so does the option. So you get this dollar for dollar movement, except the option just costs a little bit more than half. So you get that leverage involved.
Yeah, and you don't have to put up all the capital, which is kind of the trade-off.
Exactly.
All right, AJ's pick of the week,
Enphase.
Phase Energy. So maybe if you get a trigger, let's make a note to bring it back, or at least touch on it next week to kind of see where we're at
Absolutely.
with it. But that's AJ's pick of the week. All right, we've got three other exciting names from our lovely viewers all across the country and the world now. We are now a global show. Well, I think we've always been a global show, AJ, but a little bit more global now than usual. All right, this week, our first name, I believe, had earnings, and it was kind of in the news. And so Tom out of Portland, Oregon, wants to know, do we have anything brewing over at Nike? Just do it, baby. Just do it.
So definitely got an end of day signal on the earnings day, and then we popped up. We haven't gotten the follow through, and I don't usually like to purchase into a symbol right after earnings, because usually, earnings comes with some hype, and then there's some buying, and then there's some profit taking. Let's let it calm down. And I think by simply looking for our follow through, that's what we need to feel good about getting into this. But I see what you're talking about. Nike's been trading up here, usually above 70. It's at 72 right now. It's coming back down after this spike on earnings. But I think that this is actually a buy. And I'm wondering if that's what you were thinking too. I think you want to buy it, but you don't want to buy it until it calms down. So what I'm going to suggest is we look for follow through to the September 30 signal. If you get a canceling signal, which we might get, then stop looking for follow through. Stop trying to buy Nike until you get the next end of day signal. So we always look for the end of day signal and then next day or subsequent day follow through. If you don't get it the next day, you continue looking day in, day out until you either get the trade filled or you get a canceling signal. If you get the canceling signal, that means cancel looking for follow through until you get a new signal. Then start looking for follow through again. And you're either going to get the follow through and you're going to open up the position, or you're going to go ahead and get a canceling signal and you're going to stop looking for follow through. This is called being disciplined, having a plan and then following that plan. So I think that this is a buy, but only a buy on a signal with follow through. So look for that follow through. If you get the canceling signal, then stop looking for the follow through till you get a new signal, and make sure you have a fresh signal and follow through. And then I would say, yeah, let's get some Nike under our belt, and then we could potentially sell premium against it.
Yeah, I believe the consensus news was pretty positive for the week. But just being in another land and seeing how many people wear Nike, business must be good. Sales must be, on the rise, because I'm seeing the logo pretty much everywhere I go.
Yeah, in Eastern Europe. Let's see. I'm looking at if Nike has any substitute options I might be interested in instead of actually buying the stock. And yeah, I like this $45 call actually. This is a Nike. It doesn't expire until June of next year. It's deep in the money, $45 call. It's going for roughly $30.38 compared to $74.57 for the stock. So for less than half the price, you could get something that moves exactly dollar for dollar with Nike by doing that $45 Nike call that doesn't expire until June of next year. And then you could sell premium against that instead of selling premium against the more expensive stock. So yeah, there's something to be said there.
And as always, if you guys want access to this options lookup tool, the link to that is in the scroll bar and in the chat. And I know that the team is working really hard on some cool, very innovative enhancements on that
Mhm.
tool itself. So if you haven't checked it out, head on over there, get access, down or log in, give it a try. But also stay tuned for some really cool things on the horizon because from our discussions, AJ, it's not very readily available for options traders. So, super delighted to be bringing that service product to the trading trainer community. So, we'll definitely keep an eye on that. But that's Nike. Hopefully, that was helpful, Tom. Moving on to our second name from the West Coast, heading over to the East Coast. Prabhu out of Stanford, Connecticut wants to know, hey, financials are looking good. So, do we have a play in financials ETF XLF, a name that we've actually covered on the show very often?
Yeah, and you can tell I've been looking at this because I've got all my little drawings. I've done a retracement analysis on it. You can see here. I'm going to do a couple of things live here while I'm going to put back on my 3 and 5 day EMA crossing. So I got a confirmation. This was. Let's do one other thing. Let's look over here. All right. I'm looking at the analog version. So that was actually a valid signal. Okay, now I know what I'm looking at. Let's update this a little bit for everybody. Let's get rid of this. Let's get rid of this. So what we've got going on here, let's duplicate this yellow one. And let's move this to here. And then let's make this white because that's now a given. And we haven't yet found out whether or not today's up bar is going to be a signal that we've hit our bottom. But this has clearly changed trend directions on us. So with this bar not being an expansion bar, it makes that the prior trend ended right here and a new trend began right here like this. So you can see that now we've got a trend change in place on this. What are you thinking there? Who is this? This is Prabhu. Prabhu in a Stamford, Connecticut is kind of a suburb of New York City on the Connecticut side. Are you thinking that you want to buy some of this in order to sell premium? I guess that's my question for you. I'm not sure that I want you to trade this as a swing trade. Um, Maybe you're thinking that with today's gains that we are going to head back up. Let me look at the option chain on this. One of the drawbacks, so a lot of people like to sell premium or even just trade ETFs. One of the drawbacks to ETFs is that you don't have any fundamentals data, right? The ETF is a basket of a bunch of different stocks, right? But you don't have the actual fundamentals data of how well the company is doing because it's not a company, right? So you kind of have to look at the sector and I personally prefer to be able to have that fundamentals knowledge. So, but let's look at XLF in our options lookup tool. Here it comes. So there is a lot of interest in this. I'm going to let's look at the October 17th option. We're trading just about every dollar. I mean, liquidity, a lot of people are trading this. I mean, look, you've got very small bid-ask spread changes. So you could do a lot with this. I don't, so this light blue and this magenta arrows represent what we call the fast MACD. I've talked about that before, and it's a way when you're looking at a shorter duration reversals to find the tops and the bottoms. And I'm not really getting my fast MACD triggering me to want to jump into this, right? And with the trend change, gosh, and especially with, interest rates and things like that affecting the financial sector, uh, I, I see where you're going with this. You're thinking if interest rates drop, the financials should do better. But just remember, when interest rates drop, financials may be able to sell more product, meaning they'll be able to sell more loans to people because but they won't make as much money on each loan, right? Because it's when they have the higher interest rates that they can make a bigger spread, a bigger profit on each loan. So I'm not necessarily on board with thinking that if interest rates go down, that the financial sector will pop up. Um, I almost feel like I want to tell you, based on all of our different analyses here, with the retracement analysis telling us that the trend is changing directions, with our um, you know the spread between support and resistance being so small. I almost want to tell you that there's lower hanging fruit out there, that maybe there's not a solid play on this particular ETF.
And sometimes that's okay. Sometimes we see patterns a little bit more clearly than others. This one is looking a little bit choppy, and like you said, maybe you're better off looking at the energy name that we recommended earlier. But
It's true.
there's your take, Prabhu. Hopefully that was helpful. Moving on to our third and final name, Richard out of Dallas, Texas, wants to know: do we have a play in home builder, I believe, DR Horton, ticker symbol DHI, with lower interest rates?
Oh,
Housing should start to improve potentially.
this looks like a swing trade. Let's do a couple additional. Let's put on our moving average. Let's try typing the word simple. That should be, there we go. Let's take a look first at a 30-day simple moving average. This is going to give us an idea, and it's one way. I love my retracement analysis. I'm actually putting together a free download on how to do my rainbow analysis, how to do a retracement analysis. That, I would say, if we had a little bit more time, we'd do that. But looking at the 30-day, the 30-day is still showing a nice trend. It never reversed against us. It flattened, but now it's back up. So then the next thing we do is we add a leading indicator like the Williams percent R. And remember that many charting softwares like to make the Williams percent R on a 10-day. That's a day trader's tool. But for our purposes, we want it on a 14-day. And you can see this Williams percent R has dipped all the way down to 93. Over here, it's at 89.5. But anything below 90 tells us that we've got ourselves a potential for a great swing trade. And so the last thing I'm going to do is see, I think that you're on to something here. I want to add one more. Let's come back up here. Let's tweak this. Let's make it 1 and 7. So what I'm saying here when I tweak this to say 1 and 7 is a close above the 7-day moving average. And there's only one other thing I need to do. I need to turn that on so I can see it. All right. So we actually got a signal to buy this, and then we got follow through back on September 29. So we're talking about Monday. Monday, we got a signal that we should be buying this stock or buying a good option substitute. I think it's not too late. you haven't gotten a signal. You've missed a couple of the gains. So if we purchased this, we would have purchased it at 170. We're already at 175. So you missed $5 of gain on the stock, but it looks like it's still heading higher. So if you were to jump in here, I don't think that's a bad idea. And then, look for your technical exit. And if you're going to calculate, for instance, a profit stop or a profit transition to a trailing stop, I would recommend that you go back and you calculate it based on whether you would have gotten in at the actual follow through signal, which looks like it's more around 169, 170. Don't calculate it based on where you get in now, because you're a couple days late. If you did get in on Tuesday, hip hip hooray, let that thing ride, man, until you get the exit signal. I think you're in for a trade that could potentially put 25, 50% ROI into your pocket.
Yeah, and I guess if we get another rate cut, most of the real estate names should see a pop. I mean, there is historical correlation there.
Yeah. And we got to wait to see, the Fed fund rate in theory should lower mortgages and things like that. But we've seen over the past couple rate decisions that the 10-year doesn't necessarily follow the overnight funding rate. And so we kind of have to be careful about that, because, the mortgages and long-term loans are often priced off of the 10-year bond rate, not the overnight rate. But in theory, they're somewhat linked. So yeah, hopefully DR Horton benefits from any further rate drops. We'll see.
All right. Well, hopefully that was helpful, Richard, and hopefully you got into that earlier this week and bringing it to light and letting our viewers know. So we truly do appreciate that. That's a wrap on our speed round. All right, AJ, we're about running close here to the end of time. What should we as investors be keeping an eye on heading into the weekend, early next weekend? I guess the government shutdown news should have some sort of an impact one way or another.
I'm not sure if investors are actually that concerned. Again, the key word there is yet.
Yeah.
With the government shutdown, you would hope that doesn't last much longer. That it gets resolved in the next week or two. I think that would be a good headline. But as far as investors are concerned, I think that what you want to look for is any more weakness that could cause market movers to want to start to sell. So I think that's the big thing. But in the meantime, the market's hitting new highs. If you're into swing trading, just be a little bit more on your toes.
No news is good news. We're sitting here still at all-time highs heading into the weekend. Usually that bodes well and brings some positivity. So with that, AJ, I believe that should do it for us today. Let's give everyone a quick peek once again to your quick links page. As always, folks, if you've enjoyed what you've seen, feel free to show some love. Hit that like, hit that follow, hit that subscribe button. Also, you'll see access to AJ's free indicator suite, and then that options lookup tool is available in the other freebies section. And like I said, there's going to be some really cool innovations coming to that in the next couple of weeks. So stay tuned. That's AJ's quick links page. Any exciting weekend plans for you, AJ?
Just my wife's niece is having a wedding, so we're doing that down in Denver tomorrow. Again, coming back to DC on Sunday. No other plans besides just getting settled back into the office again.
It's crazy. Like, you went East Coast, West Coast. I went West Coast, past the East Coast, even more East. I actually am on my way. I have a cousin who lives out here who's actually a rather tech innovative guy and invited me to Europe's largest hackathon this weekend.
Wow.
Which I don't know if you've ever been to a hackathon, but it's basically a bunch of computer nerds who sit for like 2 days each trying to develop a product, and then they go on stage and they reveal it. And so I may be coming back to the show next week with like, holy hey, this is a really good idea, or like I never thought of this, or I saw that. So I'm excited to continue to get
Mind blown.
and my hands dirty in some more of these tech evolution evolvements as products and technology. Maybe there'll be some wearable stuff. I don't know. Really looking forward to see what may come of it.
Who's
Otherwise,
sponsoring it? Do you know?
oh, there's big names. Deloitte, Google, like it was full of they just keep touting it as Europe's largest hackathon. So
Nice.
pretty cool. Wasn't expecting it on the trip, just kind of timed itself right. Um, Otherwise, folks, we truly do appreciate you guys tuning in, your time, your dedication to coming back and uh, bringing us motivation to continue to provide wonderful investment knowledge and AJ's wonderful strategies with you and the world. So we truly do appreciate it. AJ, I appreciate you as always. You've got an early start to the show today, so now you kind of get my perspective of things. Of you still you finished the show and you got a whole day ahead of you. Me, on the other hand, I'm going to be wrapping things up here, but appreciate it. Appreciate all you lovely folks tuning in as well. Feel free to hit that like, that follow, that subscribe button. Otherwise, that should do it for us. We'll see you guys next week.
Take care, everybody.
Adios.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.